Gold and silver both have seen a retracement and then a sharper drop, but gold failed to break below the 1954 levels, which is forming a triple bottom on the hourly charts. At the same time, silver has breached 2290 levels and is a great support. So what to expect today? Is it going to continue with the drop, and can we expect it to slide more, or we can expect a bounce back? And if yes, at what levels, which position you should take in order to profit? We will try to find out with the help of charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon, which keeps you updated with the live market analysis. Also, you can join my free Telegram channel where you get the live updates. The link is mentioned in the channel and video description. Let's start. First, we'll look into gold, followed with silver. Do watch till the end. Now, this is what I meant when I say bottom has been seen. See, on the hourly charts, 1954 levels has, yesterday also it provided triple bottom. Before that also, these were a very good support, and yet again it is providing it a very good support. At the same time, on the upside, 1985-86 zone, as discussed yesterday, is again proving out to be a good resistance. So basically it is trading within this box on the hourly charts. It has to come out of the box in order to decide a direction, and hence any break below 1950 is a clear-cut direction that gold is willing to drop more, and then you can expect 1935 1915 levels, and in fact it can breach below if it stays below 1950-47 levels, then and then only. Else what we had seen here and in fact previously, it can always try to bounce back. So if it tries to bounce back, at what levels you should buy? Now see, this is the hourly charts. If you find it at around 1962-65 zone, see, this is the first resistance, and 1970 levels the next resistance. Now this complete zone, it needs to breach past by in order to confirm a little retracement on the upside. And till 85, certainly it is going to be a very good resistance, and hence if you see it trading above 1962, you can buy here, but then expect 65, 70, 75. So above 65, it's just for $5 trailing stop loss you should put. Now those who want to learn about trailing stop loss should watch the content online. It is available where you get to know how to place a trailing stop loss. So till 70, it has got very good resistance, and then the next resistance at 75. So these, in fact, on the upside, as we have seen, till 85, very good resistance exists. You have to put a $5 trailing stop loss. You can buy at 62. Now see, the stochastic is flat here. The MACD is bearish, and this is also has seen a bottom here, trying to converge here. Now see, the previous drop is breached and taken it further lower levels. Now it is trying to converge here, looking upwards. Wait for it to cross over the MACD. RSI again at bottom. It is not yet oversold. And if you look at 2 hour, on the 2 hour charts also similar is the observation. 1954 to 85 levels, it is trying to trade in this spot. The buying levels remain same, 62, 65, 70. These are the resistances on the upside. Stochastic oversold, trying to recover. MACD is bearish, trying to converge. RSI at bottom. And if you look at 3 hour chart, now on the 3 hour chart, see a bigger candle here, then the candle size has diminished here. You can see this. Look at this candle and see, it is trying to trade with a direction, and hence it needs to breach past by this zone in order to confirm a little retracement on the upside. Hence you can buy at 62, but please note, you have to strictly put the stop loss at your entry price. Whenever you see that price has moved a little distance on the upside with a little green, or maybe $2 to $3 move has been seen on gold, you can put the stop loss to your cost price. At least this much you can do to preserve your capital, because we know that it can reverse again any point of time. Now see, stochastic on the 3 hour charts is oversold. The MACD is also bearish here. It has crossed over, and this is first, second, third crossover. Now if it crosses over, it will take a direction. Right now it is on the sell side. RSI at almost bottom. Likewise on the 4 hour chart, see the candle size here, you can see these two candles specifically both getting the support at the same levels, but you can see the retracement here was sharper. I will wait for how it retraces here, and if it gives an equal stronger candle there, which chances are less, possibly we can say that it is again going to hit 80-85 zone. But right now it appears weak, and hence we have to trade with caution on the upside. Stochastic is oversold. MACD on the 4-hour charts has crossed over, trading with little divergence. RSI almost at bottom and trading flat. Now look at the daily. Now see, look at the daily chart. See, previous two candles higher lows. Here also higher lows, but here you can see a green followed by a red, and then the bullishness preceded or succeeded or followed with it. Now here a red followed with a preceded by a green, and now a bearish candle is trying to follow. The important point to note here is the consolidation zone or the support zone remains the same here, and see the drop, retracement, drop, and if it retraces from here it can take it further up here, and this time the pullback can be equally strong till the time it stays above 1950 levels. Now also if you look at the previous consolidation zone, it is almost in the same zone here. It has come back till here. Now moving averages 20 and 50 period trying to converge crossover 80-85 levels here. The 100 period moving average is sitting little below at 1940, which is going to be the next support if it stays below 1950. Now look at the stochastic. This is retrace looking down. MACD is still divergent and bearish. First wave retracement, second wave. Let's see if it retraces here. RSI is looking down. Considering this, buy at 62 and sell at 54 levels. On the downside, be cautious of 5047, 1947, 1950 zone. First very strong support. Below that, it may hit 1940, 1935 levels. Very strong support till 1935. Below 1935, a mayhem may follow, which can take it till towards 1915 levels, and in fact below levels. Hence trade with caution on the downside. On the upside, till 85 you have to put a $5 trailing stop loss. Yes, you can buy at 1962-63 levels, but then 1965, 70, 75, 80, 85. $5 trailing stop loss and trade accordingly. This is all for gold. Now let's have a look at silver. Before we proceed to silver, if you want to learn this art of trading profitably, you should join my mentorship batch. The 22nd batch starts on 5th of June. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Only limited seats are available, and hence reserve your seats now itself. Now look at silver on the hourly charts. See, silver on the hourly charts, you can find out 2310, 2320. These are previously 2310 here, or the triple bottom on the hourly charts, provided a very good support. It breached 2310. Lower lows are seen. Now 2310 is going to be the resistance, and then 2320. If these two levels are taken, silver might retrace till towards 2340 levels. Also, if you look at the movement here, see the drop and always a convergence through the 20-50 period moving average. See the drop and always a convergence through the 20-50 period moving average, which means 2320, 2340 zone can be seen if it stays above 2310. The stochastic comfortable on the hourly charts. MACD bearish yet trying to converge crossover, and this is coming at a slightly lower levels. RSI at bottom, and if you look at the 2-hour, looking at 2-hour charts, same observation. It is still trading bearish, hence 2310, 2320, 2320 specifically. If it breaks, certainly more retracement can be expected above 2320 levels. You can see this. Now the next resistance zone exists till 2340. Till there, put a 10 cents trailing stop loss, buying at 2310 levels. Stochastic oversold trying to recover. MACD is bearish trying to converge. RSI at bottom, and if you look at 3-hour charts, similar observation. The stochastic oversold, MACD bearish, RSI at bottom. Now look at 4-hour chart, and the observation stays the same. The stochastic here is oversold, the MACD here is also bearish, and the RSI here is also at bottom. Now most importantly on the daily. Now see, on the daily charts, if you look at, first of all, you can see this. If you just connect these highs and lows, now on the daily charts for silver, you can find out 2390, 2380, certainly very strong zone exists. You can see multiple daily candles getting the retracement from the same levels, and hence one should be extremely cautious of this. Breaching 2380, the direct stoppage, the next stoppage for silver is 2350 levels. If it breaks below 2380, the direct stoppage, the next target for silver is going to be 2250 levels. So 2280 levels, you should 2280-90 you should watch out for. Below 2280-90 directly it is going to hit 2250 and below levels. That is clear. Now what if it traces about 2310, 2320 zone? Yes, there could be a possible retracement which might take it see 2340, very good resistance, and if it tries to retrace further, because why? Because see, we have seen three extremely increasing body size red candles now, possibility of a little retracement on the upside can be seen here, and hence on the downside be cautious of 2280 2290 levels. Stochastic at bottom here too. The MACD is still divergent and bearish. RSI at bottom. Considering this, I will recommend you to buy at 22.15, 22.10 to 22, 23.10 to 23.20 zone is a very good resistance, and hence we have to take position with caution. Yes, you can buy at 23.10 levels, but remember this is exclusive of spread. It should be the lower end of the price, not the bid and ask. Not the asking price, but the bid price should be lower, and that should be above 23.10 levels where you can buy, and then you can expect 23.20 as the first targets, and then beyond that 23.30 40 till 20 till 23.60 put a 10 cents trailing stop loss. That's it. On the downside, see, because till 23.60 the chances of reversal will exist and exist strong. On the downside, below 22.90 you can sell, expect 22.80 and stay short just below 22.80. We have to be watchful there at 22.80 levels how it behaves. Take your trades accordingly. Trade with the stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe, and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.